Hey, what's going on, folks? Hope you're doing well today. A bit of a crazy day in the markets. I'm done for the day here. I'm slightly green on the day. Happy to be green. I was slightly red at one point, but made it up on a last trade here. I'm done for the day, and we'll go over all my trades here. So all of them were on Apple options because they have nice liquidity. You can get in and out pretty fast. And if you trade with the order flow, generally, you have a bit of an edge. All right, Apple, 9:34 a.m. I got into some calls. This was 9:34 a.m. We had a gap up open today in the markets. And we were watching for a few things, but well, I'll just go over my trades here. This is not a technical analysis video. It's more of a trade review video. So I grabbed the 300 calls at 9:34, and Apple was trading up here at 278.83. Now, something very interesting about how these option prices were moving is that I purchased them here for $66 a contract. And then we had this bear break here. And then when Apple was chopping around in here, those contracts I bought were still trading at $66 a contract. And these contracts, they have a lot of liquidity, which means that there's a lot of people trading them. And generally when you see a price move like that of 2 points, the option premiums should move. But I was surprised that they really didn't, barely move. They barely even moved a few dollars. And these were contracts that had approximately an 8 to 10 delta per contract, which means that for every point the stock moves, the option is going to move by 8 to 10 cents, $8 to $10, right? So that was something interesting that I picked up on, is that these contracts were barely moving down in price. And that signals that there's a high demand for those contracts, okay? And that's what happened afterwards, is that I guess there was like sort of a signal that there was a high demand for call options or bulls in general. And then we came up, consolidated in sort of a tightening range. And then we had a bull break afterwards. And I sold my first contract at 10 a.m., which was just after here. Let's see, actually, this is interesting. So how did I manage to sell my contract here? That's called getting faked out, okay? You can see how we broke above the highs here. It was approximately 279.17. We broke above the highs to 280, rejected 280 initially, and then came up, formed a higher low and pushed higher. And I decided to take off a contract right there. So I definitely got faked out in that regard, and I should have known quicker that these contracts were going to see some selling pressure at 280. So I got faked out and I sold half the position right here. All right, then we moved higher. And then at 10:06, I sold the other half of the position. Let's see, right here, kind of consolidation, and that generally lends not much favor to the bulls because you're seeing a higher high with not much follow through and then a higher low. So we're tightening up in these ranges. So one thing to take note of this is that the way Apple moves often moves like this, where you'll see a lot of false breakouts, then you'll get another false breakout, and then you'll get the real breakout. Sometimes you'll get a false breakout and then a real failure, you know? So it's very important to keep your eye on the order flow for these types of moves because they happen quite a lot. A lot. And look at that afterwards. After that we had the real bull run. Once it started to just squeeze higher, market squeezed everything up. And now right here, take a look at this. Now again, this is not a technical analysis video, so I'm not showing you the key price points of Apple, but basically this 282 area, 281 and 282 was key resistance if you're watching the pre-market levels. I can pull it up real quick here. Yeah, so this is generally I used TradingView for technical analysis just because I love the layout much better. So look right here on the 5-minute time frame. This was pre-market. You can see we're making these lower highs. So right up here at this resistance, we were watching what was happening around 281, 282. And as soon as I saw a bear break, I said, you know what? I was out of the calls and I was gonna try to trade this bearish at this point. So right here on this bear break, if you look at 10:15, I got into the Apple 250 puts, the options with about a 10 delta right there, and I paid $1.27 for those contracts. Okay, at 10:15, that was right here, right on that bear break. And then I stayed in the position for a while. As you can see, we got this type of thing where we came up, failed to break the highs. That was another shorting opportunity right there if you didn't get in the first time. And then we had a final bear break. And then after that, look what happened. We just rolled over all day, broke the low of the day. I was out of them. I was out of the first one at 10:32. So I sold that for a decent profit. And then I sold the other one at around 148. So I got in at 127. I sold them at an average about 145. So decent profit on that trade. But in hindsight, I sold way too early because those contracts now are trading at 260, and I believe the high was over $3 on those contracts. Yeah, see, they were trading over $3. So that would have been about a 300% winner in terms of how much dollar amount I used to buy the contracts. So, you know, that's it. I was being conservative in that regard. After that, I decided to take another bullish trade at 10:56 a.m. and this was a put spread trade, trying to trade against volatility, trying to trade volatility dropping off. Generally, it's a good trade in the afternoon when volatility drops, or you might have hit a lower of the day, but it didn't work, and I ended up covering that one for a loss. So I gave back most of my gains on those first two trades with that one, unfortunately. And that's just how the game is played. So you can see here 10:56 a.m. on Apple, it was down here where we were testing the low of the day. So I got in right here on this bull break. You can see that right here on this bull break, I got into that position. Then we came down, faked out, broke the low of the day, and then came up for a bull move. So on this trade, generally I was having a wider stop. So on this spread, my delta was around 7 per spread. So which means that for every point Apple moves up or down, my position is going to move by $7 per contract. So my stop was going to be under 274 at that point. So you can see I was entering here at 275.50. So I was risking about 1.5 points in the stock. We came down, obviously it didn't hit my stop. Huge rally. And then a huge sell right into that. We saw that yesterday, same exact deal, where we get a huge rally and it gets sold right into. And then it broke the low of the day, and then I stopped out the position at 11:24, a little bit later than I wanted to, I think. I said 274 was going to be my stop loss. I stopped out. Yeah, I stopped out at 273. You know what? And it's this really. It's this right here. You can see this kind of consolidation where we broke the low of the day, chopped around, had 3 inside bars, and then right here. Right here I should have been out. As soon as you're breaking under this sort of inside bar formation, I should not have been playing around with this trade. So that's just how it is, guys. Whatever. I sold it for higher than I wanted to, and then I stopped out for a loss. That's how the game is played, guys. Can't argue with that. So after that, I had a couple of trades on the 292.5 calls. More than a few trades here. And let's go over those real quick. So the first trade was a scalp, 11:27. Right here, as soon as this is sort of like a dip buy setup where big waterfall selling. Now this was the same setup in the SPY and the Qs and everything. Waterfall of sell, and then first close above the short-term EMA, first close above an inside bar, whatever you do, you get in, okay? And I profited from some of that buy flow, and it took us all the way up to almost 274, managed to take half the position, and then I stopped out the other half for break even. This was extremely fast right here. This move, as you can see, these are 1-minute candles. So in 3 minutes, we had this huge pop, and then 2 minutes later, it gave it all back, okay? That should be a song. 3-minute candles, 2 minutes, gave it all back. No. All right, after that, 11:31, let's see here. 11:31, I tried again right here. As we came down, tried to break the low of the day and failed. I tried to get long again, these contracts, and then I sold those for a loss at that point. So you can see I tried again right here as we came down the low of the day, got this consolidation, couldn't get a fill, and then I stopped it out for a loss, got more waterfall selling, and then I tried again a third time, and now this time it was the winner. So check this one out. Right here at 11:39, right there, boom, right on that green candle, waterfall, 5 red bars in a row, waterfall, and then green, retest, and then the real green came after that, and this was where the buy flow came. Now guys, I'm not just watching the 1-minute time frame, I'm watching the larger time frames because it's so important to understand the key price areas for this. So for that last trade, it ended up being a decent winner. I bought them for 89 and I ended up selling them for $1.03 and $1.01. Okay, so there you go, guys. That's my trading day. I'm green for the day, about 4% on the account, so that's good. And I wish you all a great day. Keep your trades managed, keep your risk managed always. All the best to you. Take care. Bye. Enjoy. Ciao.